Hello, welcome back. You see on to Market Pulse on your preferred People's Television, and this is the discussion segment. In a bid to curb the rate of unclaimed dividends and unauthorized sale of shares in the Nigeria capital market, the Securities Exchange Commission (SEC) launched the E-Dividend, in other words known as electronic dividends, in November 2015. This initiative cannot be overemphasized. More reason we will continue to help on it. Well, with me in the studio to discuss on E-Dividend is John OYIDIH. He is the Executive Director of Lighthouse Asset Management. I must tell you, he's a man of many years' experience in the financial service industry. Welcome, John.
Thank you very much.
It's a pleasure to have you right here on Market Pulse.
Thank you. It's my pleasure.
All right, we'll be looking at E-Dividends today on Market Pulse, and let's kickstart with you explaining what is dividends.
Yes, the first place to start from is actually the reason for investment in the first place.
Okay.
Investment in shares are for the reasons of the reward that you get from the investment. Yes. And this reward can either be the dividend, which is like the income that you get on the investment, or capital appreciation, that is the increase in price of the shares that you buy. Okay. So this dividend is always paid to shareholders and is always based on the proportion of the profit that the company has been able to make in a financial year.
In other words, one could say that is the reason for investments.
Yes. So that is the reason for the investment, and this dividend over time have been in paper form, what we call dividend warrant, which are always posted to the investors at the end of the financial year.
Okay, that would be our next issue right here. So previously, before the advent of electronic dividends, e-dividends, shareholders actually get their dividends through physical dividends warrants. So now what comes to mind is why the switch?
Yes, the physical dividend warrant that is like a check,
yes,
has issue because some investors change addresses, they don't inform the registrar. Okay. And so when the warrants are posted to them and they are not delivered, they get returned to the registrar, and the registrar doesn't have any way, do not have any other way of dealing with them than to leave them in their portfolio. But the e-dividend, that is electronic dividend, is for the investors to mandate the registrar to pay their dividend directly to their bank account. Okay. That is what the electronic dividend is about. So there is no intervention, there is no physical posting of warrants, and that the issue of it being returned on delivered will not arise any longer. It is paid directly to the investor's account.
Okay. So in your own opinion, what or why or who is responsible for the chunk of unclaimed dividends previously?
Yes, the issue can be blamed on two fronts. The first one, is actually the investors. Okay. Because the warrants are always posted to the address that the investor informed the registrar of. And when investors change addresses without informing the registrar that they have changed their address, the warrant will be posted and they will be returned undelivered. Okay. So the registrar do not have any way of, knowing or any other means of delivering the warrant. But in the second leg to it is that the registrar too are expected to go the extra mile. Okay. Do you understand? Because the registrar, for example, the investor, most of them or all the investors have stockbroking houses through which they buy these shares. So they could go the extra mile through getting an updated, record of address of the investors from the stockbrokers, for instance, and even from the bankers of the investors. So they should go the extra mile. But the primary reason for this chunk of unclaimed dividend, which at a point in this economy was as high as 90 billion naira, is actually the investors moving or changing addresses without informing the registrar.
Okay. Can we also say time factor, time constraint? Because most investors actually get these dividends, these physical dividends, but they no time for them to go to the bank to claim it. Can we also
that is another area, because a typical check has 6 months within which it becomes stale. So warrants are like typical checks. So once they are posted, the day the warrants are dated, the dividend payment date, if the investor collects them and does not take them to his bank, does not take them to deposit in his bank account, and after 6 months it gets stale, and you have to go through the process of revalidation of the warrant before you can pay them in. And so during this period that the warrant is with either the registrar or the investors, and he has not deposited in his bank, it is in the record of the registrar as unclaimed dividend. So the issue of getting your warrant and not even putting it in your bank is actually another reason. Yeah.
All right. You're a man with many years of experience in the financial service industry. So how can investors key into the e-dividends?
Yes, thank you very much for that question. SEC actually came out with this initiative for the quantum of unclaimed dividend in the system to be reduced or to the barest minimum. Yeah. And what they do, the moment you log on to SEC website, that is sec.gov.ng, the moment you log on to the website, the first thing that you see on the website is this e-dividend initiative. And by the time you see it and you click on it, it asks you for unregistered investors for e-dividend. Okay. You click on it and it will ask you for your name, your first name, and your last name. By the time you enter those details and click on the search, it asks for you go through some protocols like clicking on vehicles or whatever to ensure that you are not a robot. And after that, it will bring out all the dividends and all the stock investment that you have not mandated the registrar to pay directly to your bank. Okay. These forms comes in 4 columns. The first column is the investor's account, your account with the registrar, which is different from your CSCS account. The second column is your name. The third column is the company, that is the company in which you have the shares. And the last column is the registrar. So you can click on the registrar and now print the form, complete the form, and take it directly to your bank. It is now the SEC has made this thing so easy that you don't have to take this to the registrars of the various. You take them to your bank. Your bank will take the responsibility of uploading them to the portal of the registrar. Okay. And as long as the moment this is done, you get an SMS from NISSI that your e-dividend mandate has been activated. And thereafter, it is not just your current dividend and future dividend, but all arrears, all unclaimed that is in the record, the backlog that is in the record of the registrar will all be credited to your account. And SEC initially gave a deadline of 30th June for people to do this thing without any cost to them, after which there will be the cost. But now it has been extended, and so people can take advantage of this. Go and download these forms. You will see all the shares you have invested in that you have not mandated the registrar to pay directly to your account. Yes. And you click and you complete this form seamlessly and drop them at your bank, and your bank will do the rest from there. So it is a very good initiative by SEC to reduce the quantum of unclaimed dividend in the system, because if the investor do not get the reward for their investment, the encouragement to invest, and even potential investor to tell potential investor to come into the market will not be there. So SEC, as the apex regulatory authority, has taken that bold step, and I think it is very good for the capital market. All
right, I quite agree with you, 100%. This initiative it came on board November 2015.
Exactly.
And we're in 2017 at the moment. So how can you evaluate the progress so far?
Yes, at a point in 2016, there was a report that the quantum of e-dividend, unclaimed dividend, that the system has reduced by about 37%. And I know that was early 2016. So now we're in August 2017. So between then and now, I know there has been some additional reduction, even though some will get added, because of dividend that may have been declared between that time and now that people have equally not claimed. So there will be some addition, but I think by and large, the initiative has been it's encouraging and it's working very well. But the problem is some of our investors, even with this investors education and a lot of and other things, a lot of them will not take advantage of
the whole process,
issues like this. A lot of them will wait until the deadline, like what we saw during the BVN registration. Yeah. Everybody will wait until the deadline before all of us will go to queue and to do this. But people should take advantage when any initiative like this comes out. At least it is for the benefit of the investors. So you take advantage of it immediately, and you key in, and it is for your own benefit. Because if this money does not come to you, it's not doing you any good.
Another issue that comes to mind is, most investors actually expect, after completing the whole mandating and everything, when they're supposed to get their alerts, and the company does not issue dividends.
Exactly.
You understand?
Exactly.
The company does not issue dividends,
Exactly.
and they expect that after mandating, after registering with the whole e-dividend process, they ought to get their dividends automatically.
Exactly.
Without minding whether their company actually issued
or not,
declared dividends or not.
Yes.
So what do you have to say on
this?
Yes,
the essence of mandating, the system to pay your dividend electronically is not just because of past dividend declaration, but even for the future. Because there is a practical example of what you just mentioned. A client of mine some few days ago came asking that he has submitted this and he has not gotten any alert for the mandate he has submitted, and I asked him, which are the companies you invested in? And the records show that those companies have not declared any dividend in a while now. So it is not automatic that because you completed this form and have submitted it, you start getting alert. It is only dependent on whether the company had actually declared dividend in the past. But whether or not they have declared dividend in the past, the essence of doing this thing is actually, for the future. Because the fact that they have not declared in the past does not mean that they will not declare in the future. So when you mandate them now, if they declare dividend in the future, it will go to your account straight instead of you having to wait for physical. And even SEC has actually given the deadline of 31st July for issuers, that's for companies and registrars to stop the issuance of physical dividend warrant. So it is very, very important that everybody should take advantage of this opportunity of this SEC initiative to mandate the registrar to pay their dividend directly electronically to their account. But like you said, the fact that you have completed this does not mean that you must get an alert for a dividend. It is dependent on whether or not the company in which you invested in had declared dividend in the past.
One striking question that comes to my mind now is, what are the necessary criteria for a company to actually declare dividend?
Yeah, there are a lot of criteria for declaring dividend, but the very first one is that the company must make profit.
Profit first.
You don't declare dividend out of loss.
Oh, exactly.
There must be profit. And sometimes if the company has been making losses over time and they have accumulated losses, even if they declare dividend in a particular year, it may not be enough, to recoup the accumulated losses for the past year for them to declare dividend. So the books of the company must be good. There must be a profit, because dividend are actually a share of profit made after tax. That is what is being distributed to shareholders in proportion to what their shareholding is. So the very first thing is that the company must first and foremost make profit. But the fact that the company made profit does not mean that they will declare dividend, because if they have opportunities in-house and they need to plow back their profit into opportunity that is going to generate more profit for them in the future, they might seek the approval of the shareholders at AGM that, look, even though we made profit, we believe that we should retain this profit in the organization for us to be able to deliver better profits in future.
So there's always a communication.
Exactly.
To the shareholders.
Especially at the annual general meeting.
All right, John, even as we come to wrap of Market Pulse, one final advice to investors out there.
Yes, my advice to investors is that you put money in a place because of the reward you expect to get. And so when an agency like SEC, which is the apex regulatory authority in the capital market, comes up with an initiative like this, which is to help the investor, because the money that is left in unclaimed dividend, this thing is not for anybody, it's not for any. So when they come up with any initiative like this, it is good for the investor to cash in on it and take advantage of such initiative. That is my advice. And the capital market is a place to be, even though we're all beaten some years back, but you cannot say because you were beaten you won't come back. It's only to take calculated risk in coming back to the capital market.
All right, I've been speaking with John OYIDIH. He is the Executive Director of Lighthouse Asset Management. And as you know, I always bring to you the finest minds you can find in the business world. Well, you've heard it all from the horse's mouth. E-Dividends is a very wonderful, a fantastic initiative for you to key into. As an investor, your profit is key. So make sure you key into the E-Dividend and follow up as necessary. The SEC, the Security Exchange Commission, has made the registration free at the moment. So make sure you key into it and participate to enable you get your unclaimed dividends. Well, John, many thanks for having you once again on Market Pulse.
Thank you very much. It's my pleasure.
All right. This is the size of our package on today's episode of Market Pulse. I remain your host, Gabriel NISSI.